this.
Oh, I love to see all those great names and faces in there, Andy. Look at how many people are popping in there already.
There we go. We're up to 20 people so far already. That's a good start. Welcome everybody. If you're just joining us now, we're going to be starting this first time home buyers class. So I'm glad you guys all showed up. Thank you for taking time out of your Thursday to join us. We're right at 7 o'clock, pretty much right at start time here. So we're going to give it another couple minutes, let more people file in here, and then we can get going. But just so you guys are aware, if anybody has to take off for whatever reason or come back and they missed something, this is recorded. We will have a recording sent out to you within a day or two after this is done. So don't worry if you miss anything. There's a lot of information to cover here. So we are going to be running through this pretty quick here, as quick as we can, but still answering all the questions we can. And that's the other thing too, is there is a chat. We do ask you guys to, if you have any questions at all on this, just throw it all in the chat. One of us, either myself or Ryan, are going to be monitoring it most of this. Usually it's going to be Ryan for a lot of it, answering all the questions, but there is a Q&A session at the very end of this. So you can stick around with us. We'll hang out for a few minutes afterwards and answer these questions. So don't worry about that if we haven't answered anything for you. So there are two people here with you guys. There's myself, I'm Andy Goddard, and there's also Ryan here with us too. So we're going to get a lot of great information today. And I'm going to, at any point during this, if you want to talk to us one-on-one, I'm going to be popping this into the chat a lot during this, so don't worry about missing it. But this is the booking link. Basically, you click on this link, it'll bring up a calendar of all the available times that we have. And if you want to book a one-on-one call with us, either to talk more about buying a house, whether you want to get your pre-approval started, or whatever it is you need from us, definitely book a one-on-one call with us. It's huge. We're happy to help you guys out. So yeah, click that link if you need more information on this, and I will be putting in a lot here. So we're up to about 23, 24 people so far. That's lots. I'll give it another minute and then we'll get rolling with this, because like I said, there is a lot. But again, thanks everybody. Appreciate you guys coming out here. It's a nice Thursday evening. Hopefully it's not raining too much, but we'll try to get you out of here. It takes about an hour to get through all this. Then we have about however long you guys want to hang out with us and answer some questions. So that's what we're gonna aim for today. And yeah, don't be worried. Feel free to use the chat as much as you can. There's no bad answers or questions or anything like that. We'll be happy to answer them all for you. We have another little bit, but I think we got a pretty good group to start anyways. Again, if you guys have to leave, or for anybody that just came in, if you have to leave for whatever reason, this is recorded, so don't worry, you're not going to miss anything. You'll get a link to the recording afterwards. But I think we're about there. Okay, we're gonna get this thing rolling here. There's a few more people. That's okay. We'll get this rolling right here. As you guys noticed, the first text that was sent out when you guys signed up to this is that I'll be giving you guys some things for free, which is true. It is. I appreciate you guys coming out to here. So the first thing you're gonna get right away is a copy of the complete guide to buying a home book that I have been developing. It's chock full of some great info on what you look for when you're buying a home. I do have it in a paper copy, but I'm going to email out a free ebook so you guys can read it on your laptop, your phone, tablet, whatever you guys have. Plus, I'm also going to send you guys out a free buyer's guide that just outlines the things that Ryan and myself can do for you guys, or will do for you guys during the whole buying process, so you know exactly what it is that we do and how we do it. So again, thank you guys. Thanks everybody for showing up today and taking time on your evening. So let's get down to this. The biggest thing that I want to, reiterate here is, if you guys are feeling any of this when it comes to home buying, because we all hear what's in the media, we always hear, a lot of things, that this is one of the biggest purchases of your life. So don't feel bad if you guys are feeling any of this, because honestly, we've all been there. When I bought my first house back in Alberta, I felt all this. As a whole process. It was a weird process. I didn't understand a lot of it. So that's why we put this on, is to kind of alleviate a lot of this. And that's our goal for the end of this, is that we alleviate hopefully all of it, if not most of those. And if there's something that's unclear with this, just let us know and we'll fix it for you. But that's why we want to do this, is so you guys know exactly what's going to happen when it comes to the home buying process. And what Ryan and I do during the home buying process is basically hold your hand the whole way through, just so you know exactly what's going on, because there's a whole lot that goes into this. But anyways, we'll do a little bit of introduction. So again, you know who it is that you're talking with. So first off, I am Andy Goddard. I am a realtor here in Saskatoon. Well, Saskatoon is my main hub. I am licensed in all of Saskatchewan, but I do service Saskatoon and surrounding areas. I live out here in Warman with my family. So my wife, my two kids, my son and daughter, and our dog Zeke. We've lived out here since 2016. I have a ton of family around the area, so I love to call this place home. It's always been home to me. So um, yeah, it's a little bit about who I am. I've been doing this for a few years now, help many satisfied buyers and sellers during the whole process. We do work with a lot of first time buyers. We honestly love doing it. Just there's so much information. We love dealing with it with them and walking them through the steps. So this is really great stuff for you guys. Sorry, Ryan, 1 second. I am going to put in here the booking link again. So for anybody that didn't hear at the start, there is a booking link, and also a Linktree address. So that has all my social media and all my contact information. So that Linktree address has everything from my phone number all the way to all my different social media profiles. There's a ton of stuff on there, so feel free to check it out. But that booking link is going to be the big one. That's so you can book a call with us one-on-one and really get into what you need when it comes to the home buying process. So again, that's a little bit about me, Andy Goddard with eXp Realty. I am a realtor around here, and when it comes to buying a house, is unless you have the cash to pay for the house, you can't buy real estate without having a pre-approved for a mortgage. So that's why I'm partnering up with a fantastic mortgage broker, and I will let Ryan introduce himself.
Sorry, guys, just getting myself off of mute. You can tell it's right in the summer here. My name is Ryan, and as Andy mentioned, we work hand in hand with each other. He handles basically the property real estate end, and I am the financial guy that handles all the mortgage stuff. So I am born and raised in Saskatchewan, born and raised in Saskatoon. I've been in the mortgage industry for over 20 years. I've worked not only on the broker side, but I've also worked for the lenders and insurers that we deal with as well. So the stuff that I deal with across the board on the mortgage side, I'm well versed in how to handle it on all sides to really help you out all the way through the process. As Andy mentioned, this can be a very stressful, busy time, and we want to do everything that we can do on our side to make this fun and enjoyable and take that stress out of the process. And we handle all that hard stuff for you. So know that we're working in the background for you all the time. And hopefully we're going to make this a really fun and nice and enjoyable process all the way through. I am married. I've been married for 28 years. I have two wonderful sons, Jordan and Austin. And we just actually got a brand new kitty cat. So hopefully you don't see him come running through the screen here. But yeah, I'm a Saskatoon boy, born and raised, love the Saskatchewan market, and we are eager to help you out on both the real estate and the financial side. Back to you, Andy.
All right, thanks, Ryan. Appreciate that. So I've worked with Ryan for quite a while now, and there's just no better team dynamic than working with Ryan. He takes care of everything on the finance side of things. I need something, he's there for us, and it's a great situation to be in when you're working with him. So that's who it is that you're talking to right now, and we're happy that you guys are here with us. So now we're going to get into the actual buying process and what it is to look for, because that's going to be the biggest thing. There's a ton that goes into this. So I can't really go through every little detail because we'd honestly be here for hours with it. But this is just kind of a little bit of a breakdown of what you're going to expect when it comes to buying a home. So the very first steps of home ownership, if anybody ever comes up to me, whether they're renting and they're just tired of renting, or they're ready to move out on their own and they actually want to buy a house right off the bat, the first thing I always recommend them do is to learn everything you can about what it takes to buy a home. What do you need? What to look out for? And that's why we put, again, this class on, is to teach you guys what it is you need to at least get a pre-approval and what the process looks like. So once we get that going, I always say to meet with a mortgage broker. I always recommend Ryan out and say, talk with Ryan. He'll let you know if you're qualified for a mortgage or not. And that's the first major step, because honestly, without a pre-approval or cash to buy the house, we can't buy one. And in this market, the way it's going, where things are moving so crazy fast, you have to have a pre-approval before we can even look at houses, because by the time we look at one and then you go to get pre-approved, the house is going to be gone. So such a big important step is to get that pre-approval. It's like gold right now. So that's the biggest step. We'll get into what it takes to get mortgage approval right away, but that's just the first step. So once you get pre-approved for a mortgage to a certain amount, we now know the price range that you can shop for in a house. That's a huge thing too, because you don't want to shop for a house that's over your pre-approval amount, because it's very hard to come back from that. So if you're looking at a $400,000 home and you're approved for 300,000, that's a big range that's very hard to kind of get around, right? So if you're stuck on looking at $400,000 homes, but we're not approved that much, it's really hard to get back into the process. So we just want to eliminate that right away and get that price point locked down. So then what we do is, once we have that pre-approval in that certain amount that you're approved up to, we start the search. So I start a basic search for you. We kind of see what it is that you want in a house. Do you want an actual detached house? Do you want a semi-detached house? Do you want a townhouse that you don't have to deal with much maintenance on? Or do you want an apartment style condo just to get yourself started? Whatever it is that you need, we're going to figure out. We're going to figure out where in the city you want, what you all need, what you need in a house, what you want in a house, and just go from there and tailor a search for you to find that right place for you. Then you're just going to get updates on any new listings, and we just start looking at places. So once we start looking at these homes and you get a feel for what it is and what you're looking for, and then you find the one that you want, we discuss how much we're going to offer on the property and other factors like possession dates and things like that. We figure that out and we send that offer out to the sellers, and hopefully they either accept it or we kind of go into a negotiation period and get that right price point set. Once we have an accepted offer, which is the big thing and the key thing, then we start doing what's called a condition period. Usually it's around a week and a half to 2 weeks. And that gives us time, well, it gives Ryan time to finalize the financing, because now he knows exactly how much he needs to get the approval amount for. And then it'll give us time to do a home inspection, because when you're buying a house, one of the biggest in purchases of your life, you need to have a home inspection to make sure the home is sound and there's no underlying issues that we can't see during the walkthroughs. And any other conditions that we have. If we're buying a condo, it gives us time to get the condo documents reviewed, make sure everything looks sound with that, and all that. So once we have all the conditions satisfied, and everything looks good and sounds good, the financing is good, the home inspection went well, and all those things, what we do is we lift the conditions, and now it's a firm sale. We just wait for possession date. So while we're waiting for possession date, you would meet up with a lawyer to finalize that side. So you get all the transfer of title and all the documents transferred over into your name, and all the home insurance and things like that are all done with the lawyer. Then the last step is to simply wait for possession date. And once that's there, we have the keys to it. I hand you the keys to your new home. You walk in and we do a quick walkthrough, make sure everything looks good, everything works and functions the way it's supposed to, as it was when we had the home inspection and the walkthroughs. That way, if there's any other issues, we can bring it up. But if all is good, you are now the proud owner of a new home or your first home. So again, that's a very quick rundown of everything. I can go on for hours with it, but that's kind of the general idea of how it works. We just look at houses, we offer, we do some conditions, and make sure the house is sound, and we finalize and you move in. So that's a very, very short version of it, but there's a lot that goes into it, and it's kind of a house by house and person by person basis. So we can get into that a little later, but that's pretty much the steps of home ownership. Again, if anybody has any questions about this, just throw it in the chat. I have a lot to run through, so I will try to answer some questions. Ryan's going to be answering questions. I see that through there. And then there is going to be a Q&A session at the end. So if anybody has any questions on just the steps to buying it, just what I've covered here, let me know. But we are going to keep going ahead here on the first steps, which are the financial side of things. What do you need to get a pre-approval? So this is a big one. Let me know in the chat. Let's make sure this chat. So I see Ryan's already talking on there, which is great. Let's see in the chat. Does anybody know about the first-time homebuyers incentive program that the government of Canada has put on? I know a lot of people haven't heard of it, but I'm just curious if anybody actually has at this point. Perfect. So that's good. So some people have heard of this. So yeah, So again, some people have heard of this, and there's a lot of gray area with this. So there is a lot to cover in this, and I'm going to do my best to explain the benefits of this. But it is a very good program, especially for buying your first house if you need to use it. And I'll explain on how this can help you. But this definitely helps with the pre-approval as well, so you guys are aware. So far, the government of Canada has used about $1.25 billion worth to make home ownership more affordable for new home buyers in Canada. Now, that number is probably a little lower now. That was from, I think, 2019. So it's probably a little higher at this point from that, but that just gives you an idea. So what is it and what does it do? So the first time home buyers incentive is a shared equity mortgage in your home. So when you buy a home, you put a mortgage on it. That's where the financing is. And the government of Canada is going to also have a partial mortgage on your home as well. It's an investment of sorts. So they're going to give you a chunk of money to match your down payment. They're basically going to give you about 5% additional of a down payment. So in order to buy a home, you have to provide your own 5% down payment. The government's going to match that. So this chunk of money they give you is an investment into your house. They want to invest in the value of your home. They want to see your home value rise as much as we want to see your home value rise. So they're going to invest in it. This money that they give you isn't interest bearing, so there's no interest on it. There's no regular payments you have to make on this, and you can pay this. You can pay them back at any point without a prepayment penalty, right? So that's the big thing is there's no interest, no payments to be made on it, and you can pay it off in one chunk at any time. And I'll get into a little bit of that. So who can qualify for this program? So basically anybody who's a Canadian citizen and a permanent resident, anybody who's here on a work visa can also apply for this. You just have to have 184 days left minimum on your work visa in order to apply for this. As long as one person that is buying a home is a first-time home buyer, you can be qualified for this. So if you are going in this with your spouse and your spouse has owned a home before, but you haven't, you can still qualify for this. If you are going in with a spouse or somebody else, as long as your combined qualified annual income does not exceed $120,000 a year, you can qualify for this. Basically, the government just states if you make over 120,000 a year combined, you don't need their help with this. But anything less than that, they're happy to help with that. As long there is a cap to it as well, so you cannot exceed 4 times your total qualified annual income. So if you're using this program and you're buying and your annual income is $100,000, you can't buy a home worth more than 400,000. All right, so it just can't be 4 times your annual income. That's the cap with this as well. So just watch for that when you are buying a home, and we'll talk through all that with this whole process too. And also the maximum down payment, including this incentive amount that they give you, cannot exceed 19.9%. Basically, what happens is anything less than a 20% down payment on a home, you have to pay mortgage insurance fees on the mortgage. Anything over 20%, it becomes an uninsured mortgage, and you don't have to worry about paying these insurance fees. This program is not going to help you get out of paying these mortgage insurance fees. So that's why it will not exceed 19.9%. So if you put 15% down, they're only going to give you 4.9%, just again, not to exceed that 19.9%. So again, there's some restrictions to using this program, just so you guys are aware of that. But anyways, there is another first-time home buyer program that you can use with that as well. And it's if you have any RRSPs saved up, you can withdraw up to 35,000 of them per person and use them as a down payment, as well as using it with the incentive program. They're not exclusive. They're both defined to first-time home buyers. You can all use at the same time. And again, that's per person. So if you go in with a spouse, you can take up to 35,000 each, up to $70,000 if you want. The only thing different with the RSP program compared to the first one is you have to start paying back into your RSPs within the first 2 years of using them. As long as you start making payments on them within the first 2 years, you start paying those back. Where the incentive, you pay it all back at one time, at one shot. So just be aware. But if you are using the RSP program, please reach out to your service provider, whoever's providing you with the RSPs, and make sure that you can use it for that. Because we did have one incident where somebody thought they could use them for that. Turned out they weren't allowed to, and the deal that we had on the table ended up crashing because of it. So just reach out to whoever your service provider is before you decide to use them, just to make sure you can. All right, so back to the first time home buyers incentive program. So when do we pay it off? Because I did mention that there's no payments or anything. There's 3 different times that you can pay off this incentive amount they give you. The first is if you decide to sell the home within, the first 5 or so years, you pay them back using the proceeds of the sale of your home. That's usually the more common one. At any time during the 25 years of your mortgage term, you can pay it off either by one lump sum, or you can refinance your mortgage to take that incentive, put it into your mortgage, and pay it off that way. The last and final way is at any point during the 25 years, you can either, or at the end of 25 years, sorry, if you pay out your mortgage after 25 years, you can pay it off by one lump sum, or take out a small equity loan on your home and pay it off that way. So those are the 3 ways: either when you sell your home, pay it off at any time with a lump sum or refinancing your mortgage, or by taking out a small equity loan at the end of your mortgage terms. Now, how does this work, and and why do we recommend that you pay it off as soon as you can? This is kind of why. So back when I said this is a shared equity mortgage, it is an investment, so they want to invest in your property value. So here's a little example. If you buy a house at 400,000, 5% of 400,000 is $20,000. That's the amount that the government of Canada is going to give you. And now that's how much you're going to have to pay it back right when they give it to you. However, when your house value rise, let's say it rises to 500,000 and you decide to pay it off, then they want 5% of how much your value of your home is at the time you pay it back. So if it rises to 500,000, instead of giving them their 20,000 back, you give them their 25,000 now, because that's 5% of the 500,000. That's where their investment is. They want to see your home value grow, so their investment grows with them. On the flip side of things, if you go to pay them back and your house value has dropped to 300,000, then you have to pay them back only 15,000 instead of 20,000. Those are some drastic, they're pretty drastic, going from 400 to 500, but even $100,000 value increase of your home, you're only giving them back $5,000. So you're earning $100,000 more in equity and only paying them an extra 5,000. So it's not that big in the grand scheme of things. But even if you decide to pay them back and your house is valued at 425, we're only talking a few $100s. It's not a whole lot. But just so you guys are aware that when you do pay it off, it has to be based on the current value of your home. That's why you can't make installments or any payments of some sort, because they need to know the value of your home. Hopefully, if I'm losing anybody with this, because there's a lot of stuff going on, throw it out in the chat and we'll be able to answer it more clearly for you guys. But just so you're aware that they are investing into it. And so, I have a lot of people ask, well, where's the benefit to this and how does it help us? There's actually 2 separate ways that this program can help you buying a house. The first way is, here's the example. The first way is that, let's say we want to buy a home. We'll use a 400,000 as an example because it's easy math. Your minimum down payment is 5%, which is $20,000. So you put that down, you're going to have to borrow $380,000 in order to pay for the home, right? You're 20,000 down, get 380 from the bank. So if the incentive kicks in, they essentially double your down payment. So instead of 20,000 down, you're now going to have 40,000 down. So instead of borrowing 380, you only have to borrow 360, right? So what happens here is, sorry, I'm just reading what Ryan's got. I see Ryan's got a lot going on, so that's good. Throw all the questions in there. So what happens is, instead of putting the bare minimum of 5% down, you are now borrowing less from the bank, which makes your monthly payments less. Also, with those mortgage insurance premiums, remember when I said at 20% you don't have to pay them? Well, at 5%, which is the minimum down payment you need, those mortgage insurance premiums are at all-time high. When you put 10% down, those premiums drop drastically. When you put 15% down, they drop even more. So what this is doing is basically giving you a 10% down payment. So your mortgage insurance premiums are less. You're borrowing less money from the lenders, which makes your monthly payments less when you first buy their home. So that's the first way that it helps you, is just less payments, less amount of payments a month, just to kind of give you a little bit of help. The other thing that this can do is also boost you into a higher value of property. That's kind of the more common one that we've been running into. So an example of this one is, let's say, again, with your income and your credit and everything, and you can be approved for $40,000 or $400,000 home, but you only have a $10,000 savings. That's not enough for a 5% of a down payment. However, if the government kicks in an additional $10,000 for you to essentially double your down payment, that pushes you to the minimum 5% of a $400,000 home. So that's where the other helpful thing lies, is that they can actually boost you up higher. So if you have everything ready to go and approved for a certain amount of money, but you just don't have the savings there to get you to that higher level, this can also help with that. Doubling your down payment can actually help you get to a higher value home. So let's say
Andy, I'm just going to kind of stop you there quick. You
sure,
do always have to have your own 5% down payment first. You can't use the first time home buyer incentive as part of your initial five. You always have to have your own 5% down payment first, and then the government will give you an additional five.
right, there
Just
we
wanted to
go.
clarify that a little bit, guys. You bet.
Right. Yeah. And that's what Ryan's for. He's got my financial back there. But yes, this will essentially help you increase into a higher value home. But this, we always say if you don't need to use this program, don't, but it is good for starting out if you do need it. We have helped lots of first-time home buyers use this program, and it has worked well for them to get them into a great home. But again, if you don't need to use it, don't use it, but it's there for you for assistance, right? So again, if anybody has any questions on that, definitely reach out, book a call with us. I'll put it in here again. But yeah, book a call with us. We can discuss more about this first time home buyers incentive program and how it can help you buy your first home if you need to use it. So that's a little bit covers that incentive, but we're going to get into now what actually it takes to get a pre-approval, even using that program itself. So when it comes to getting mortgage approval, this is the biggest thing. Is there's three things that go into this. They're going to review your credit, they're going to look at your income, and you're going to have your down payment. Like Ryan mentioned, you do have to have your minimum 5% down payment of your own just to get your pre-approval going, right? So they're going to take all these three things, their credit, your income, and your down payment to combine to create your pre-approval. So that's the biggest thing. So credit, we're going to start with the credit. Usually they want to see around 620 to 650 of a credit score to start. They're going to check to see how you do with making payments. Are they on time? Have you been missing payments? Do you have debt collectors coming? Do you have a solid credit history where you can borrow money, pay it off really quick? How many lines of credits do you have open? Credit cards open? Things like that. They're going to review all your credit and see how well you do with more payments. Then they're going to look at your income. So they're going to want to see what you make, and that's going to determine a lot of what you can be pre-approved for. So what they generally want to see if you don't work a salary position is they're going to want to see about 2 years worth of income tax returns to see how much you make over the last 2 years. If you have a salary position, that's even easier because we can always get a letter from your employer that shows what your salary is, and they can work with that a lot easier. And then for anybody that's new to Canada too, by the way, if you haven't been here for the 2 years to get the tax returns, don't worry. There is a great new to Canada program that's there to help you guys. Ryan's got some great info on that he's going to touch. So just don't worry about if you don't have 2 years worth of credit history built up. There is a program for anybody new to Canada. But that's what they're going to look for your income. How much do you make? How much you make over the last 2 years? Or if you have a salary, they can just take that. And the third and final thing is they're going to see how much you have saved up for a down payment, because that's also going to limit you on what you can also buy, right? So if you have 15,000 saved up, 15,000 is great for a minimum down payment of a $300,000 house, because that's 5% of 300,000. So that, however much you have saved up is going to also affect how much you get approved for, right? So those three things all have to kind of combine to get your pre-approval. But the great thing about them is when they are underwritten, so it's going to be they're going to review it as the whole time here. So they're going to review your income, they're going to review your credit, and they're going to review where your down payment source came from as well. So anybody new to Canada, if you has just arrived over here in the last few months, if you have any money overseas that you want to bring in to use for a down payment, that money has to be brought over to Canada into a Canadian bank account and be sitting for at least 90 days untouched to use it. All right. If you bring in extra money on top of that, every time you bring in more money, it'll reset the counter for 90 days. So we want to say if you are planning on using money from across seas, bring it here as soon as you can so we can get that 90 days started. But the nice thing is with these pre-approvals, they're reliable and they're going to tell us your maximum qualifying amount, because knowing how much you can be approved for is huge when it comes to buying a home, because you want to know exactly what you're approved for and shop within your range instead of going over and then having to work with that. I think this is, yeah. So again, throw some more questions there if you need, but I'm going to let Ryan touch on that new to Canada program that I mentioned earlier here.
Hey guys, sorry, just finishing up a couple of comments on the chat box. Great job on the questions. Absolutely some wonderful stuff coming through there. And if you do have any questions, please feel free to keep putting those questions in the chat box. Andy and I are going to be monitoring that all the way through when he's talking. Of course, I'm going to be monitoring that chat box and vice versa. Now that I'm going to go through the New to Canada program, Andy will be going through and making sure that that chat box is monitored. So one of the biggest things that we have in Canada, is immigration. We have one of the largest and biggest segments of our first-time homebuyer market in Canada does come from our new immigrants that do come into Canada. It's a huge driver of the housing growth in the country. And really specifically, what we're finding is that initially people really flock to the larger markets, your Torontos and your Vancouvers. As housing affordability in those two centers has skyrocketed, we're seeing a lot of new immigrants coming into the inner prairies, into Manitoba, and specifically into Saskatchewan, as the housing in Saskatchewan is some of the most affordable in the entire country, if not the entire world actually. So we're seeing a lot of new immigration coming into Saskatchewan specifically. So the New to Canada program is one that we do a ton of. Andy and I have been doing a lot of these for a really long time. And one of the biggest things, Andy kind of touched on it right out of the gate, we can use the first time home buyer incentive with the New to Canada program. That's one of the big advantages with the first time home buyer incentive is it does really merge very well with the New to Canada program for our New to Canada friends. Now, how do you qualify underneath the New to Canada program? So there's a couple of ways. Realistically, right out of the gate, you have to have immigrated to Canada within the last 5 years, so fairly recently. So this isn't for somebody that's been here for 10 years, established credit, got their PR, all that sort of stuff. This is really for somebody that has very recently come to Canada, over the last couple of years. They have, maybe brand new or fairly new credit. And they are, as Andy mentioned, on a permanent residency or a work permit status. Unfortunately, student visas don't qualify under this program, but permanent residence and work visas absolutely do. And of course, if you've got your Canadian citizenship, even better. You don't need the New to Canada program at all. You just qualify it as a new borrower. So they have a couple of different options that we typically go through. As on the screen there, we have down payment options as low as 5%. So if you have been in Canada for 12 months or longer, and you can show what we call alternative or supportive credit by way of 12 months worth of rent and 12 months worth of a utility like a power bill or an energy bill, SGI plate, anything that shows a structured payment, and you have that for 12 months as well in Canada, you can get as low as a 5% down payment. Now, on the other side of that, we do have some people that are fairly new to Canada as well. And anybody that's kind of over the 6-month mark, new to Canada, but underneath that 12-month mark, we do require a 10% down payment for those guys. You do have to have 5% still from your own savings. But there's an option for those guys, even though you're fairly new to Canada, 10%. Now, here's where the first-time homebuyer incentive is going to be a great addition. This is really where we've been using it pretty largely here. So all you would need for those people that have been here over 6 months but less than 12, you would still have to come up with your own 5% savings, but we would use the first time home buyer incentive for the other 5% to get the total of 10 for you. So you still only need your own 5%. We would just piggyback that first time home buyer incentive on to get you a total of 10% to get you into that New to Canada program. So as you can see, that first time home buyer incentive, a really great addition to the New to Canada programs as well. Now, a couple of things that I really do want to touch on that Andy and I have been seeing in some recent files. Probably the two biggies. Number one is employment. So people coming in new to Canada, there is a requirement that you do at least have 3 months of full-time permanent employment. Okay, so that doesn't mean on a term or a contract. That means a full-time permanent job, with an employer. If you are on a part-time or a casual, unfortunately, they do want that full-time for at least 3 months to see that. I have been seeing a lot of clients coming in and starting jobs that are terms or contracts. Now, sometimes if they are for a large employer like the Saskatoon Health Region, or maybe teachers, going through the health, or sorry, the education board. Sometimes we can get exceptions on those, but as a rule, anything that is on a term or contract does require at least a 2-year history. So watch that employment. If you're on a term or contract, give us a call. Let us go through it. We'll see if we can get that exception, but typically contracts require at least a 2-year history to be able to use that income and don't qualify. Now, the other thing that we've been seeing a lot of is down payment. With the New to Canada program, one of the biggest things that we need to really worry about is down payment. Typically with, in Canada, our minimum requirement for down payment is 5%. That typically comes from a few different sources, savings. It can be from a family gift. It can even be borrowed in some circumstances, borrowed from RSPs, things like that. With the New to Canada program, though, the first 5% must be from your own savings. Okay, so really, really important to know, you can't borrow underneath the New to Canada program. You cannot get gift from family underneath that New to Canada program. That first 5% must come from your own savings. So what we look at is we need a 90-day track record of that savings in your Canadian bank account. Okay. Now, what we've been seeing a little bit is people that have moved money overseas. What we always recommend, get it done right now. Get it moved out of that, that foreign account into your Canadian account. Let it sit there for the 90 days, the 3 months. Best case scenario. If you're moving it over, what we can do sometimes, again, on exception, is if we can get a 3-month track record, 3 months worth of bank statements on your foreign account. Those statements must be in English. Our lender does have to be able to read those statements. So 3 months worth of statements in English from the foreign account. Then we have to have confirmation that you have moved the money into your Canadian account via wire transfer, and we have to have confirmation of the receipts of that wire transfer. So as you can see, moving money out of a foreign account into your Canadian account, there's a lot of paperwork. So best case scenario, get it here early, let it sit for 90 days. We're good to go. Lots of things to talk about here on the New to Canada program. I could literally talk about it all night, but I won't do that. What I recommend, guys, if you are in that situation, click on the booking links that Andy and I have been putting in the chat box. Let's talk one-on-one. Let's go through your specific scenario and answer any questions that you have and really analyze what would be the best situation for you. Dealing with these one-on-ones and explaining to you exactly how your personal situation is going to work is the best way that we can help you out. Lots of New to Canada friends. Looking forward to helping you out. I'll turn it back over to you, Andy. Thanks so much.
Awesome. Thanks, Ryan. Yeah, like a ton of info that comes at everybody when you're buying their first home. So again, bear with us. There's a lot of information, but Ryan just throws it out so well, and all that New to Canada program has worked wonders for a lot of people. So definitely reach out, and we can definitely explain that more for you guys. So that's pretty much a lot of it for the pre-approval. Again, I'll reiterate, you got to have, they're going to look at your credit, your income, and your down payment. We've talked about a lot of the down payment sources. Whether it's a gift from a family member, whether it's, your own savings, or there's also, I didn't cover it yet, but it's a more exclusive one. But right now, the Métis Society of Saskatchewan does have a first-time homebuyers grant where they give you up to $15,000 for buying a home. You do have to be part of the Métis Society, although, just so you guys are aware. So if anybody wants any more information on that, please reach out to me. I do have some really good info right from the Métis Society I could send you to review. But those are the typical ways of having a down payment. Now, there is one more thing I want to touch when it comes to the mortgage approval side of things before we move on to some other things, is that's a co-signer. So I've had people ask, can I have a co-signer if my credit's not quite good enough? And yes, you can have a co-signer for you. We would just have to, have a good conversation with you both, make sure they understand what goes on and what what the results are of being a co-signer, right? So if you don't make your payments, they are going to come after your co-signer. So we want to make sure that everybody's aware of that. But as long as the co-signer lives and resides in Canada and has an income, can basically be approved for a mortgage themselves, being a co-signer for you, yes, you can definitely have a family member co-sign for you. You can also use the first-time homebuyers incentive with a co-signer. Just got to remember your income with your co-signer cannot exceed that $120,000 a year. But yes, they're committed to being a co-signer for you for as long as you can't qualify for your own mortgage. So they would just be on the title with you as well. There is some extra cost to it after the fact. So if you do decide you want to take off whoever is your co-signer, you do have to go back to the lawyers, let them remove them. And I believe the last time we checked between a few different lawyers, it was around the $700 to get that done. So there are extra costs to it, but it definitely is helpful if you need a co-signer. So if you do need a co-signer to help you out, definitely reach out to us. We can walk you through if it's, if it's the right steps to do and to make sure that your co-signer are aware of the risks as well. So again, that's just one last final piece to that. Keep rocking these questions in the chat. Ryan's going to monitor all the way through, and I'm going to keep going a little bit. I got one last thing to deal with the finance side of things, and that's using your bank. Now, there is no issues with using your bank. Everybody has a bank they use for whatever their day-to-day businesses are. Like, whether you use RBC, Scotiabank, TD, whatever it is, there's nothing wrong with that. And we're also not saying you cannot go directly to your bank and talk to them about this, but there are some things I want you to realize when it comes down to using your bank versus using a mortgage broker such as Ryan. There's some huge differences, and there's a big reason why I recommend everybody to Ryan. And I'll reiterate this. So we don't have a whole lot of time. There is a big story I had with this, but basically to break it down for you, I had a client. They were buying a home. They loved their bank. They banked there for years. They told them they have always had nothing but good things to say about their bank. So they decided they're just going to go with them anyways for their mortgage because they already had a mortgage on their current house. We sold it. We're buying a new one. And I did recommend they talk to Ryan and just to see, because Ryan, there was a very, very, very strong chance that Ryan could have got him a better rate and a better approval number, saving them money in the process. But they just liked how their bank did things for them. So they went back to them. And long story, like a very long story short, they did not do their job very well. They almost cost our clients their new house that they were purchasing. They almost lost our clients their deposit. They almost cost them a ton of money in a house. And they were almost borderline going to be without a house because their other one sold and they couldn't buy the new one. So what happened was I called up Ryan. I said to Ryan, we need a huge solid here. And Ryan was actually able to get them the pre-approval that they needed because he could get them a smaller interest rate, worked his magic, found out ways, different source of income they had. I think it was through like the child benefits and things like that. They were able to get them a little bit more and it matched their approval amount they needed. And so again, Ryan saved the day because he was able to have smaller interest rates. He knows what he's doing when it comes to this. He can find ways to help save you money and do this right. So that's why it's a huge thing, right? Again, the bank almost costed a client of mine their house and a lot of money. Not saying every bank does that. Don't get me wrong. I'm not bashing all the banks. My dad's a general manager of a credit union in my hometown. So I don't bash banks at all by any means, but just I've had way, way more luck using Ryan than other clients that have used their own bank. And again, I'll go over about some things that to watch for. So this is why it's so much more valuable to go and use Ryan compared to going to your bank. So Ryan as a mortgage broker has access to 30 plus different lenders products where the banks are restricted to their in-house products. RBC has their own product, TD has their own product, Scotiabank has their own products, right? And they're going to sell you their products and their products alone, where Ryan can actually shop around to find you the great rates, the great programs, the great lenders instead of just one specific program. He also works the same hours as me as a realtor. We kind of work like, well, it's 7:43 right now, and we work evenings. We work on the weekend, what we can do for you guys. Whereas if you try to get a hold of your bank, they're going to be closed, after hours. And some of them are open on Saturdays, but Sundays are usually closed, right? So if you have a question about your financing or whatever, you can text or call Ryan, at a good chance at any time, and he's going to be able to answer for you at a timely manner. Whereas a bank, you're just going to get their voicemail saying we'll give you a call in the next business day or so, and that just That doesn't really work very well when you are dealing with a live real estate deal that is happening at, let's say this time at night. Banks aren't open, but I could text Ryan and Ryan can give me that answer I need to write the correct offer that we need. So just so you guys are aware, that's the nice thing they do. The banks tend to offer their bank posted rates as well, so they'll have their own in-house rate where Ryan's going to offer you the best mortgage rate up front. And there's a huge thing between rates that some people don't really think about, right? So if the bank is offering, I'm just throwing numbers out right now, but if the bank says they offer you 5.5%, Ryan gets you 5.4%, that 0.1% may not seem like a whole lot, but when you stretch that out over a year, over 10 years, over 20 years, that saves you so much money. Like, let's say if it can save you 10,000, like if it saves you $1,000 a year over 10 years, it saves you $10,000. I'd rather you pocket $10,000 than just spending it on a higher interest rate just because it was easier, right? Saving money is what we do for you. That's our goal, is to protect your money and to save you money, right? That's our goal for this. So that's how Ryan can help with is that way as well. Ryan works for you and his service is free. You don't have to pay Ryan a fee to get a pre-approval and get your mortgage done with him. He doesn't charge you an upfront fee or anything like that. Um, and again, the biggest thing is he works for you, where the bank, the mortgage lender at the bank, yeah, they'll work for you in a sense, but they also have to make sure their employer, the bank, is satisfied and everything like that too. So they essentially are working for both you and their employer. Where Ryan strictly, he's your guy. He's working for you. And again, like I said, you can call or text him anytime with any questions. Banks are generally harder to get to hold of. I have dealt with deals that have dealt with Ryan that have been super smooth, and I've had deals where I dealt with banks where I have to call them 3 or 4 or 5 times a day just to get them on the phone. And even then they don't answer me. I have to try and email them and wait for them to email me back. And it's very frustrating when you're trying to help, somebody trying to buy a home and we're not getting the answers that we need. So again, those are some huge things on why it's so beneficial to go through a mortgage broker like Ryan to save you money, to give you the access to the personal products that you need, right? So this is a huge thing. So again, there's also something you want to see too is that, if you decide to move, which lots do, most people that buy their first home don't live in it forever. Whether there's a change in family, whether you're a growing family, you need a larger place, or you're moving to a different city, you lost your job or got a new job, you want to upgrade or downgrade, whatever the reason is, most people don't live in their first home for the full 25 years. So let's say you want to go and sell it in 5 years and upgrade to something else. We want to make sure that if there's any payout penalties on your mortgage. Now, banks tend to have, not all of them, again, I'm not saying they're all are, but some tend to have higher payout penalties. And what Ryan can do is can tell you what the penalties would be, give you an idea, and try to keep them little to no as possible if we can, right? Because we don't want you to feel like you're getting, you have to pay a good chunk of money just to sell your home, right? So that's where again Ryan comes in and he can, let you know about everything like that. We don't want you to get hit with a massive payout penalty that the banks can sometimes have, and then that just ruins a lot of things. So again, using a mortgage broker is very, very financially beneficial for you for buying a home. Okay, so that's a lot to cover for the finance side of things. We are running a little bit behind schedule here, so I'm going to run through these next little bit here, but that's the biggest part of the financing. Keep throwing the questions in. I do have to start going a little faster here, so I'm just going to run through the last couple things really quick with you guys. And it's more about the real estate side of things. So the mistake that people sometimes make is buying directly from a builder. I don't touch a whole lot on new builds because not a lot of first-time buyers buy a brand new build. Some do, but not that many. Most people buy a resale home. So I just want to let you guys know on why it's important not to go directly to the builder. So again, a builder is a lot like a bank. They're going to sell their product and their product alone, where I can show you different builders' products, different resale homes that could be a better fit for you. And I can even let you know what builders are the good ones and the ones you probably don't want to deal with because they have shoddy work. I can't say that on this live recorded webinar because I don't need that coming back at me, but just so you guys are aware, I can get them when it comes to buying new homes. Chances are they don't negotiate a lot on price, because if you negotiate on price on their one new build, that affects the price for all their new builds going forward. So they tend to stand pretty firm on their pricing. but I can negotiate appliance packages in for you, maybe some landscaping in for you, maybe, let's see what their package is to do the basement or finish the basement or whatever. We can always look at those and see if it's worth it, or if it's worth just doing it yourself, right? I can try and throw that in for you, negotiate on your behalf. We can also see what are they offering, like, do we need to do any holdbacks in our offers and things like that, what to look for when we're reviewing builders docs with them. There's a lot that goes into it, and you need somebody on your side reviewing it on your behalf, not just a builder saying, yeah, it's fine, don't worry, right? So we you need that backup when it comes to buying from a builder, because there's a lot of stuff that goes into builders documents and offers for builders that we want to make sure you're crystal clear on, and not just sign it because they said it's going to be a great, fantastic new house for you. But again, you're not really saving a whole lot of money going directly from a builder, but you are losing a lot of knowledge by going directly to a builder, right? If you take an experienced realtor in this, like myself, we can negotiate things for you. We can warn you about certain things in contracts, make sure that the price that you're paying for it isn't going to increase because of some little thing they have in their contract, right? There's little things to watch out for, and there's a lot of it when it comes to new builds. We have dealt with a few of them, and there is a lot that goes into it. So trust me, you want all the help you can get when it comes to new builds. Again, I don't touch a whole lot on them, but that's a little bit about new builds. I can go on a lot more with them, but we are running a little bit out of time. Go ahead and book a call with us. We can definitely answer more questions that way. But one of the things I really want to touch on is home inspections. It's a huge thing when it comes to buying a home. I don't recommend anybody ever buy a home without one, not even a new build. I recommend anybody buying even a new build to get a home inspection just to make sure everything's up to standard. There's no hidden things. Um, normally a home inspection for a detached house runs around the 450, 475 mark. I've had people say that, well, it seems a little expensive for a home inspection, but when you're buying a home worth three, four, $500,000, that little $400 is very minimal compared to what you get for a home inspection. It's a fantastic investment for buying a home. These home inspections cover everything. They'll look at everything that we can't see when we do our walkthroughs. They'll test all the appliances. They'll test the furnace, the AC, make sure the hot water heater is good, make sure the electrical and the plumbing is good, make sure there's correct insulation in the attic, make sure there's no mold or water damage, make sure your windows are good, make sure your roof is good, make sure your foundation is good. They don't miss anything, especially the ones that I recommend you use. They don't miss anything. They cover everything. And the nice thing about a home inspection is it's built into the contract as a condition. And if there's something wrong with the home inspection, like there's some major issues that is going to cost a lot to fix, we can walk away from it and go find a house that isn't in need of a lot of repair. Every home inspection, you are going to find something, and they're usually little minor things you can take care of yourself. But if there are major things, like there's an issue with the furnace, there's an issue with the hot water heater, there's an issue with whatever, there's a leak somewhere in the roof, we can go back and either get them to fix it or knock some off the purchase price so that you guys can take care of it on your own with your own trusted contractors, right? So there's a lot of things we can do when the things come back on home inspections. A lot of it is the ones that I like to cover is the ones that are bad for your safety and things like that. Like electrical is a big one. I always make sure that's up to code. So there was times where there's some issues with the electrical. I've had them fixed to make sure it doesn't burn down the house or anything like that, right? Same with dryers; those are big ones that causes fires. But I also make sure that if there's any damage to the attic or anything like that with the insulation, we always make sure to get that rectified, and little things like that, right? So I did see a question really quick here that how much a home inspection costs now. 450 to 475 is pretty standard for a detached home, and it goes less than that for if you buy like a townhouse condo. They're about just around the $400 mark, and if you buy an apartment condo, they're around the $300 mark. So depends on what you're buying, but that's kind of the range. Anywhere from 4 to 450 is roughly how much a home inspection costs. But these are huge to have. Like there's a solid book of all the information on your house, even tips on how to maintain your house. I've had one on every house I've bought, and I'll always do one on every house that I buy just because it's that important. And again, it helps you if the house is in a very bad state that we couldn't see, you can walk away from it. And that's the huge thing when it comes to buying a house. Like I said, we want you to save money. We want you to invest your money properly. So we don't want you to buy a house that is going to need a lot of repair that we didn't know about until after the fact. So these are huge, and I do not ever recommend you skip it because you can save a ton of money if you have one. If you don't do one and you find out that there's a whole bunch of mold in your attic, well, that's going to cost a lot of money to fix, or their foundation is cracking beyond repair, things like that, right? So it's huge, huge, huge to do. Uh, I have a bunch of examples I can use for my own house itself. Again, we are running a little low on time, so we have about 5 minutes left. I'm going to jump ahead really quick here to the last one, and that's if you're buying a condo. So anything that has a condo attached to it, so whether it's an apartment style, a row townhouse, or if there's even a detached or semi-detached house that's part of a condo community, you're going to have a condo document to review. We call that the estoppel package. All right, so that has all the workings of the condo. It's going to tell you what's in the reserve fund, the maintenance fund, tell you what all the bylaws is about the condos, tells you what you can and can't do with it, any restrictions on pets or anything like that. This is a giant document. It's going to tell you what's been fixed, what has to be fixed, or if there's anything that needs to be fixed. And the biggest one is that we want to know how much is in that reserve fund because that's the amount of money they have saved up. So if they need to do a major fix, that they take it out of the reserve fund, not doing what's called a cash call, which is coming to the unit owners and asking them to add more money to it to pay to help fix something. Okay, so a cash call is something that we really want to avoid. That's why it's very recommended you get these reviewed by a lawyer, right? So I know what's in these documents. I'm just not qualified to explain it and make sure it's good. That's what lawyers are for. I have some great ones that I recommend to people. They will review it for you and make sure that you're not going to be getting a cash call anytime soon, or at least hoping we're not, right? They're going to watch for that. And all the condos that I bought so far, I've only had it where our lawyers told us to not buy a certain one just because of how bad the estoppel was. But he'll always walk through it with you, make sure you know what it is, make sure how you know how much money is in there and everything like that. But it's very important that you get that reviewed by a lawyer. You have to pay a lawyer anyways to do the transaction, so you might as well just have them review the document for you. But a couple of things that'll save you money by doing this too is that the bylaws are a huge one. So, usually with apartment style condos is more, it's more common with that, but in the bylaws, it can state what you can and can't do for renovations in your unit. So in apartment style condos, some state that you may not be able to put laminate or hardwood flooring in the main living area because it gets rid of that sound barrier that the carpet has for any of the unit owners underneath you, right? So they may say you can only put carpet in the main living area. So I don't want you to go in and start ripping out carpet, putting your own in, spending the money, then finding out that you got to rip it all back out, put new stuff in, and potentially get fined for it, right? So we want to make sure you're aware of that, or any other kind of renovations for the outside. Make sure you know who covers the roof costs if you got to replace shingles. Is it you or is it the condo board? And make sure they have enough money for that. So there's a lot that goes into this for the condo review as well. So again, this is built into the contracts. It's a condition. If you guys get this and look at it and it finds out that there's no money or not a lot of money, then you can walk away if you choose to, because there could be a cash call coming your way. You have every right to walk away and we find a better condo, right? So again, this is to help you get out of it. We want to make sure what you're buying is sound and not going to cost you money in the long run, right? Besides your normal maintenance on a home. So that's a lot of it. Again, it could save you a lot of money just by not knowing what the bylaws are and doing renos and things like that, or doing something you're not supposed to, or a cash call could be coming that you aren't aware of without getting reviewed by a lawyer, right? So cash calls can be any range of money, just depends on the reserve fund. It can be $1,000, it could be 5,000, it could be upwards of $20,000. Depends on how well the condo is run, right? So most of the condos that we buy are all run pretty good. I do know of the great condo corporations that are out there. So we could, usually we're pretty good with those, but the odd time one comes up that there may be a cash call and some people just don't want to deal with it. So we go find another one, right? So again, huge to have that, huge to have a lawyer review it and everything like that. So I think I kind of hit the timing right on the money. We're about 7:58. I did have to go through the last little bit a little faster than I wanted to, but I hope that kind of gave you guys an idea of what it is. Again, there's lots of questions here. We're going to we're going to in the Q&A session here, but I'm going to put the booking link in again for you guys. I hope you guys feel a little bit less stressed and concerned about this. Hopefully you guys learned a little bit about what it takes to buy your first home and what you need to do. Again, pre-approval is a huge thing when it comes to buying a home. That's always first and foremost. So again, we can get talking to Ryan, get him to help you out, figure out what you can be approved for, and we can go from there. Uh, and so hopefully this does help you guys out a lot. When you do click on the booking link, it's going to look something like this, where it's going to show you, the different times and dates available. Definitely reach out whenever you want. The booking link is there for everybody. Go ahead and book a one-on-one. We'll be able to help you out with your own personal situation and help you out that way. But that's kind of a wrap for most of it. Ryan and I are going to stick around for a bit here to answer all these questions. I know I got to go through a lot of these. I see Ryan's been going through a ton of them. So I've been talking for a bit. I might let Ryan kind of take over and see if there's anything he wants to kind of reiterate on.
Let's take myself off of mute. Lots of great questions here, guys. I mean, of course, with webinars like this, we typically do see a theme that really jumps out at us as we kind of go along. The first time home buyer incentive was always a hot topic. The new to Canada stuff is always a hot topic. And always, Andy always ends it with a bang. That the inspection stuff always gets a lot of good questions as well. So a lot of great stuff here as well. I'm going to continue to kind of go through. I think we've got most of the questions. We've got a few here kind of at the end here. I'm just going to kind of go through and see what we've got. One of the questions I've got that's popping up very recently, and I've got it kind of a few times, is now a good time to buy a house? And Andy and I talk about this a lot. We always recommend buying a house over renting one. And the reason for that is I would rather have you put your own money, your hard earned money, into building your own equity by paying down your mortgage and watching your house appreciate in value over that time than worry about the interest rate. Yeah, I mean, we are seeing some elevated interest rates. Just to let you know, historically in Canada, interest rates on a 5-year fixed are typically between 4.5% and 5.5%. So right now we're right at that 5.5% mark. So everybody thinks that rates are elevated. They are slightly up over what we saw during COVID, but keep in mind that during COVID, the markets across the world collapsed, right? So we saw rates plummet all over the world from right in that 4 or 5% range all the way down under 2. It did it for a very short time. It was done to really stimulate the economies across the world and make sure that they didn't stall out to keep housing prices going. Now that COVID has started to release its grasp over the last couple of years, we are starting to see rates normalize. So if you think that rates are higher because they're higher than a 2% COVID rate, we'll never see those rates again, people. Those were really a time in our lives that we've never seen sub 2%. In fact, we had never seen lower than 3% historically in Canada before that. So if you're expecting that rates are going to go back down there, they aren't. They're going to normalize probably somewhere around the 4.5% mark. As we go forward, we are slightly elevated over that. But again, I would always rather you put the money into your own mortgage, pay down your own mortgage, and watch your property value grow than worry about a slight change in the interest rate. The other thing about housing prices, they're not dropping. They're continuing to rise as we go forward. So if you think that you're going to wait this thing out and you're going to think, oh, in a year, I'm going to get a cheaper house and the rates are going to be down, you're probably going to pay, 5 or 10% more, in a year than you would have today. So, if you ballpark a $400,000 house, you could pay upwards of, $40,000 more in a year than you will today. And I'll tell you right now, the slight difference in interest rate might be, in the $1,000 range, maybe $1,500 range. It will not be in the $40,000 range. So this is kind of why we say building your equity, much more important, much more value than worrying about a slight difference in the interest rate. So long story short, do we think now is a great time to buy? Absolutely. It's always a great time to buy property versus paying rent. Okay. Money goes into your own pocket, not your landlord. What's another question here we got from Anwar? That was a great question, by the way, Melissa. Anwar, as soon as payments are done, can the buyer can move into the house and then pay monthly for 25 years, or any waiting is needed? Okay, so I think what you're asking, Anwar, is as soon as we do get your mortgage approved, and move forward. Can you move into the house? Yeah. So what typically happens is Andy went through the process. We're going to go through, we're going to, have a look at your situation. We're going to get a pre-approval done for you. We're going to review the three biggies. We're going to talk about your income. We're going to talk about your down payment. We're going to talk about your credit, get you set up to go make that offer. Then you're going to work with Andy. He's going to find you an absolutely great home. We're going to collect your documents, your income documents, and your down payment documents, and we're going to get that mortgage approved. And what Andy does is he sets a possession date for you, the move-in date. And as long as we get the mortgage approved by our condition of financing date, you will be ready to go to move into that home. And yeah, typically it's a 25-year amortization, a lifespan on your mortgage, and you can choose payments that are monthly, bi-weekly, semi-monthly, or weekly. So lots of great options there for you. Hopefully that helped your question, Anmar. Great question. Shahir, I heard the rate drops during the winter. Is this correct? Typically, no. The rate fluctuates with the market. That's a great question, Shahir, because we do hear a lot about, when is the best time to buy during summer or winter? We definitely see the market heating up in the summer as far as people want to get out, and especially here in Saskatchewan when the weather's a lot nicer in the summer than it is in the winter. People are out moving, they're buying a lot more houses, but it really doesn't affect the interest rate at all. Interest rates are really dependent on the market, right? So how Canada is faring market wise is really what drives the interest rates, and even how Canada's market internally compares to world markets is also a factor in where those interest rates go. So that is not typically seasonally dependent. We might have a lot of more houses being bought and sold during the summer months than the winter. As far as interest rates go, typically that does not fluctuate up and down seasonally. I saw Andy put the booking link in there. So again, some great questions, guys, here, and lots are fairly specific. One of the things that we always want to talk about is if you have specific questions, get a hold of us. Book that one-on-one meeting. Let's talk to you about your own specific situation, go through your individual needs, and answer any questions specifically for you. Click on that booking link. Absolutely, Shahir. Click on that booking link. Let's talk to you one-on-one and get the process started. Of course, these webinars, they're going to be fairly high level, right? To deal with your specific situation, we do need that one-on-one meeting. So click on the booking links, guys. Talk to Andy and I one-on-one. Let's kind of really go forward. Next question here. I heard getting my own house will have lots of additional maintenance payments to be made, which is not the case of a rented property for newcomers. Really, that's misinformation, Matul. Great question, though. There's lots of great homes out there for sure. We actually put people into brand new homes, which do not have typically any maintenance with them. It's really, Andy's the best in the business. He's going to find you an absolutely great home that fits your budget. And of course, if the home has a lot of deferred maintenance, we're probably going to recommend that you don't buy that home, right? That's what Andy is there for, is to work with you and really make sure that the home is a good home and not going to cost you a lot of money. And if you want to jump in there just to kind of go through a little bit of some of the due diligence that you do when you're going through some of these houses with your buyers.
Yeah, 100%. And Ryan hit it right on the head there. So when there's a lot of different buyers in real estate, but for first-time home buyers, I always steer them clear. Unless you're handy and you're okay with fixing things yourself, I don't recommend finding a house that needs a lot of work, that you need to put a lot of work into once you move in. What our goal is to get the best bang for your buck, and whatever your pre-approval amount is, we're going to find you the best home that we can that has at least most of the stuff updated. So what we're really looking for is the big ticket items. That is shingles. Shingles can be anywhere from 5 to 10 grand and up, depends on what you want and how big your house is, right? So you want to make sure the shingles have been updated recently or how much life is left in them, right? Usually shingles are around 25-year lifespan. Some are going up to 30 to even to 40-year lifespans, but typically we see around 25 years. So when we look at a house, whether it's a house built in the 60s, a house built in the 2000s, somewhere somebody would have updated at some point. So we want to make sure when was it done and how much life is left in that. Same with the furnace. Furnace is another big ticket item. Could be anywhere around 5 or more thousand and put one of those in. So you want to make sure when was the last time that was serviced. You know, has it been replaced recently? Hot water heater is another one, not quite as expensive, but those typically have a 10-year lifespan. So you want to see when was that updated? Your air conditioner, right? Then it comes to appliances. When were they updated? Right. And then again, we go, it just all trickles down to other things like flooring and things like that. But what we try to look for when we're buying your home is that how much do you have to put into this? And we want to find the home that doesn't need all the big ticket items done. It's already renovated for you. That part's already done for you. We call it a move-in ready home is what we look for, right? And again, it all comes down to price range does affect that, but I work with any price range and we work to find the best home for your price that you're in. And that's what I look for when it comes to buying a home. So again, that's a great point. That is what we look for you. Again, our goal is to save you money, put more money in your pocket, build more equity, and not have to put it into maintenance that you don't need to do when it comes to buying a home. And that's the goal that we do. So yeah, hopefully that helps a little bit. What
That's a
else?
great rundown, Andy. Thank you so much for doing that. A few more questions. We're just keep them coming, guys. You know, Andy and I are going to stay here as long as you kind of have some great questions for us to keep moving forward. Another great question from Anwar: what happens if the buyer cannot repay the lender? What will happen? Don't do that. The lender is lending you a lot of money based on a lot of criteria that you are going to pay that back. If for some reason you don't, they will foreclose on your home and they will take it back. So make your payments. That is not something that we want to hear. And I mean, if that's a concern and there are credit issues, you know, we do have some checks and balances in place when we do go through your credit, but making your mortgage payment is of the utmost importance. And we do have to make sure that those are paid back to the bank. If not, they will come in and they'll foreclose and repossess your house. So we don't want it to go down that route. What have we got here? Another great question from Melissa. I'm concerned about annual property taxes. Is it recommended to buy an old house or a new house? Great question. You know, absolutely. Property taxes are a big part of, you know, of our costs to owning a home. Property taxes are typically based on a couple of different things. They're usually based on, you know, what is in the house and you know, the overall size, what's in the house, the lot size, all that sort of great stuff. And it's also recommended on area. I'm going to actually turn this one over to my property expert, Andy, to maybe touch on that a little bit. But don't worry about the property taxes. It's really kind of going to be relative to the home you're going to buy.
Yeah, and that's exactly right. Price also does affect property tax too, so it all depends on your price point. But when you're shopping around certain price points, the taxes generally stay kind of the same with it, right? It depends on the area, it depends on the maintenance, right? That's where your property taxes come in. And so I wouldn't be too concerned about that. The age of the home necessarily doesn't really affect the property tax in a sense, right? It's mostly for everything around it. So just a little perspective, roughly, oh, what did I do last year? Let me try and think here. Around the 300,000 range. Well, my house, I'll put it in perspective. My house, we pay property taxes of 3,200 a year roughly. We're out in Warman. Another house that we looked at today, it's worth 600,000, and that's property taxes is $5,200 a year, right? But then your average home sales around the 400,000. They're anywhere from, you know, $3,000 to $4,000 in property taxes. So that's generally what you're looking at for it. So the age of the home isn't really going to be affected by the property. It's usually the area that it's in, right? So the newer areas, you know, it all fluctuates again, depends on how much maintenance that area needs and things like that, right? So that's definitely something we look into when we are looking because that is part of it and how much is the property taxes. So we can always go over that. It's usually per house kind of basis too. Where is it? How much is it? What does the house have? Does it have a finished basement? Does it not have a finished basement? Right? That all affects your property tax. So we would have to kind of go property by property on that one, if that makes any sense at all. Hopefully it kind of did a little bit. But yeah, yeah, and it's property taxes there. Nobody likes to pay them. I don't like paying them either, but it's kind of a pain, but it is what it is, right? It's an unfortunate part about owning a house, but you're paying it regardless, right? Like whether you're renting or you're buying your own house, your rent is based off of their mortgage plus their tax and things like that. So they're not going to be losing money. So you're essentially paying the landlord's property taxes for them as well. So it's just all built into it as well, just to keep that in mind. So again, I'd rather your money go into your pocket instead of paying the landlord, right? So That's a big thing on that. Hopefully that helped a little bit. What else do we got there?
Just finishing up a quick one back. If let's
Yeah,
see, what
me
do we got
too.
here? What's the next one here?
Are
Helen's
you?
iPad. Hi, Helen. Are you allowed to pay off your mortgage before the 25-year term? I'm assuming you mean the lifetime, the amortization. Absolutely. So there's lots of great options for prepayment. Most of our lenders have between 15 and 20% of the original mortgage that you can actually pay down penalty free each year on your mortgage. We can, typically we can increase your payments. You can put down that 20% as a lump sum. You can increase your payments up to 20%. You can accelerate your biweekly and weekly mortgage payments. And then, after all of that, that's all penalty free stuff. And then after all that, if you want to pay down your mortgage, further than that or off completely, you can always still pay that off. There is just the penalty that would apply on the remaining amount. So great question, Helen. You can always pay your mortgage off before the 25-year term. Sometimes there are prepayment privileges that you can do for free, penalty free. And then anything over and above that, there would be the penalty that would apply to the difference. A great question here from Aslam. You expect house prices to always go up in Saskatoon. Is there any history of their coming down? And which is a better investment, a condo or a house? So I'll kind of take the first part of that, and then I'll kick it over to Andy for the second part of that. Housing prices, and he can even touch on the housing prices as well historically. What I found, I've been doing this for 25 years now. So I mean, I've kind of seen historically what housing prices have done. They've always kind of steadily gone up 2 to 3% in the Saskatchewan market. We are one of the top three most stable markets across the country, Winnipeg being the other, and Ottawa being kind of the top. Now, what we found is that in these stable markets, they really don't go through the large property increases and property drops that a large center like Toronto or Vancouver goes through. Toronto or Vancouver, they are really super they really flow with the market. So as the market goes up and down, people buy and sell tons in Toronto, and it's a huge driver there. So they see their prices skyrocket and then drop. Here in the prairies, we don't. We really see that 2 to 3% steady eddy increase. Even during COVID, when the market went red hot, even up to 17 to 20% in Toronto, the Saskatchewan market only increased by 6 or 7. Now, the flip side of that is we didn't see the large 17% drop as soon as COVID was over. We stayed steady, and we were one of the only places in Canada that still had property values increasing. So a couple of things I want to touch on there. Number one, yeah, we typically expect that properties are going to steadily increase in Saskatchewan. So if you're waiting for the prices to drop, they're likely not gonna. They might plateau a little bit, but they're gonna kind of steadily rise up. The other side of that is you don't have to worry about buying a property and seeing the value plummet. That doesn't happen here in Saskatchewan. So if you buy a $400,000 house, it's not going to be worth 300 in a year. It's just not. The market here is very stable. It's probably going to be worth 402, 405, 410 in the coming years. So it's going to be a nice steady investment. It's going to grow for you. You're not going to see those typical big ebbs and flows. I'm going to turn that back over to you to kind of finish that one up, Andy, if you don't mind.
Yeah, and Ryan touched great on that with the with the property values and everything like that rising. Yeah, it's a steady increase year over year, and that's the nice thing about being in Saskatchewan, one of the cheapest provinces in Canada for buying a home. Now the other part is what's a better investment, a condo or an independent house? Now Ryan did touch on it. We usually see those detached homes go for 2 to 3% increase year over year. So there is kind of a tiered system. The most equity you're going to build in any real estate investment is a detached house. That's always going to be the biggest that that builds the most equity over time. Underneath that is going to be a semi-detached, which is just your half duplex. Then you go into row townhouses that are the 5 or so connected townhouses. Then it goes down to apartment condos. So if you're looking at strictly what's going to build me the most investment or the most equity over time, a standalone detached house will. But there's also the other things you can think of, right? If you just want to get a starter home and even an apartment condo, that's fine. you can buy one of these apartment condos. They don't appreciate a whole lot right now. They're still on the low end of things. However, you can essentially turn that around and, rent that out, get some rental income yourselves, use that as a down or part of your approval for your next place, because now you have rental income coming in. That's extra income for your next approval amount for your next home, right? So you can, for an investment standpoint, a lot of these will work if you want to rent them out. But for equity alone, those are your tiered levels, right? Detached home, duplexes, townhouses, then apartment condos, right? So I just want to make sure, hopefully that answers it for you. But as an investment to build your equity as a house, but a lot of these properties are great to invest in to rent out, right? So you just want to look at what the rental amount is in the area that you're going to be buying and then just kind of work some math. I've bought lots of potential investment buyers, some condos around the city, and it's always how much is the average rent around this area we look at. Then we look at how much your mortgage is going to be and see what kind of money you're going to be roughly making, month over month, year over year with it, and kind of make your decision that way. But there's always good things to invest in the areas and things like that. Little things we can look into it. It depends on what you're looking to buy and how much you're willing to spend. But hopefully that helps you out for when it comes to what's the best to invest in, right? Houses 100% all the time are the best investment for your money, but everything's still a good investment. It depends on what you're doing with it. And the property itself, we got to make sure it's a good property too. We don't want to buy something that you got to put a lot of money into if you're just strictly wanting to buy it to rent it out, right? So what else? What else do we got going on here?
I think we got. I think we just got one left that I saw, and I've just asked for a little clarification. This is a question from Hope. Great question. I just want a little clarification, dear. If you can just um, type in your response for me. She asked, "What is the additional cost slash tax component to the actual cost of a property, and what does it usually cover?" I hear 11%. I just wanted to clarify what you mean by additional cost or tax component. Are you maybe referring to the CMHC insurance premium that's required for less than 20% down payment, Hope? Or is there something else that you're looking at clarification there for? Do you follow that, Andy?
Yeah, I'm kind of not. I was reading that too, and I was like, well, I'm not 100% on that one either. The cost tax component. Yeah, that's
Okay.
a good one.
I'll kind of go through. I mean, if it is the CMHC cost that you're talking about, that insurance premium, that is part of something that does come in. Anything that is under a 20% down payment does require CMHC insurance on it. It really depends on the amount of down payment. So at 5%, that CMHC insurance would be 4% of the mortgage price. So, and that is automatically added on to the mortgage amount. It is not something you pay up front. That would be built in to your overall mortgage. If that's what you're referring to, that's what that would be. And what does CMHC insurance cover? That's kind of a great question. So what CMHC covers, I'll give you a little bit of a quick history lesson here. Back in the 80s, any mortgage in Canada did have to have at least a 25% down payment to go through a bank. That was just a requirement. You had to have at least 25% down to get a mortgage, no questions asked. The government really wanted to really spur on the housing economy and start a lot of housing in Canada. And they came up with this program that allowed banks to allow clients to come in with as little as 5% down. Now, the bank kind of said, hey, whoa, that's a lot of risk on our side. We're going to be really only allowing clients to put down 5%. We're going to be covering the other 95%. We want some coverage here. And the government said, you know what, we're going to start this insurance company called CMHC. It's funded by the government, and it really protects the bank and allows you to go as a homeowner, allows you to go into a mortgage with as little as 5% down. What it actually does is covers the bank for the risk of default. And if you ever go into default, the CMHC would take back your house and they would pay out the bank. So it kind of covers the bank for the risk of a 5% down payment. The bonus and benefit to you as a homeowner is you get to come in with 5% down instead of the normal 20 or 25% down that was required. So hopefully that kind of helps answer that question for you. Hope if there is, oh, no, I mean legal fees. Okay,
Yeah,
perfect.
I was
No,
in-
I appreciate the clarification there. Good. So yeah, what the additional legal fees are is 1.5%, so not 11. Great. Thank you for the clarification because that's a big difference. What is typically built into the legal fees is you're going to have to pay. In Canada, all mortgages do have to be registered on title. The lawyer is the guy that does that. So the lawyer is going to be essentially he kind of handles all the money, he prepares all the legal documents, and he does the title registration. So the legal cost typically is doing that land title transfer tax and also the legal work for the lawyer. And typically what that comes out to is 1.5% of the purchase price of the property. So bank on, we do have to have that as part that we do have to show the bank. So we have to show the bank your 5% down payment. We also have to show them that 1.5% legal closing costs to show that you're able to complete the property as well. So thank you so much for the clarification there. Hopefully that answered your question.
There's one
Uh,
there's one I wanted to touch
sorry,
on.
go ahead.
Might have missed it here. This is from Eric. Says I'm 6 months here in Canada. Oh wait, I think. Oh, never mind. You already answered it. Never mind. I see that now.
Yeah,
Okay,
we
continue on.
yeah, so a couple of let's see, do we have one kind of here down at the end?
what's the
Yeah, we
average
got
price?
one.
What's the average
Yep.
price of a three-bed condo, an independent house in Saskatoon, based on your expertise? Now, that's really hard to say because it all depends on where and what, and a whole bunch of different things, right? Like a three-bedroom condo, that could be anything from a townhouse, duplex, apartment, condos. Depends on where in the city. Is it in a high rise? Is it, it could be a range of things. Same with an independent house, like a three-bedroom house could be, in, what are we looking at? The average house price in Saskatoon is about 350,000. But now you look at houses over in Brighton and in Stonebridge, we're looking at the high fours, into the fives, into the sixes, right? But then you go into some older areas on the east side of Saskatoon, they could be anywhere in the mid threes to the low fours, right? Or even the far west side of Saskatoon, it can be a little bit cheaper there too. Or right in the center of Saskatoon, a three-bedroom house could be anywhere from, you know, high hundreds to, 2 to 300,000. It all depends on where and what you're buying, right? A three-bedroom house with an unfinished basement is going to be a lot less than a three-bedroom house with a finished family room in the basement, right? It's little things like that. So it all just depends on where and a whole bunch of different factors on what the price is at the house, right? So yeah, but again, average house price in Saskatoon is around the 350 mark, but again, it goes a wide range depending on where you're going in the city. I do know that a lot of people say they don't like the west side, which I understand where they're coming from. I just know that if you look in the Hamptons and Kensington area, there's a very good chance that you can buy the same home there for about 20 to 30 to even upwards to 40,000 less, and you can buy on the far east side, right? Because a lot of people all say they love the east side. I just want to let you guys know there are some really great deals over on the west side in Kensington and Hampton. Super nice areas, super well developed areas, really nice homes. So, if you don't have a big hate against the west side, it's always a good option. It can save you money over there for a really nice house as well. So just so you guys are aware with that. Is there anything else that we kind of missed at all? I think that's kind of everything. I see there's a lot of people that have book calls with us, so that's great. I appreciate it. I look forward to talking to each and every one of you guys soon. Hopefully get things going here. If anybody has any questions, keep running them out. We are about 8:30, so I think we covered a lot with this one. So I believe we're going to kind of wrap this up here anyways and get everybody off to their evenings and get things going there. So again, appreciate everybody for coming out. Again, big thanks to Ryan for discussing everything on the finance side of things and going over questions with everybody in the chat there. And again, yeah, thanks for everybody for coming out.
Have a great night, everybody. We're looking forward to connecting soon. And Andy, if you want to throw that booking link in there one last time
Yeah.
for our final 13, maybe. We look forward. If you haven't booked yet, click it. Set up a one-on-one with Andy and I. We'd love to connect and talk to you. Yeah, let's get the process started, guys. We're looking forward to really helping you out and being a big part of your process.
Sounds good. All right. Take care, everybody.